All right. Good morning, good afternoon, good evening, everyone. Welcome to the Inner Circle Live pre-New York session. I'm your host for this morning's session, Benny Allen, along with my awesome partner, Mr. Ryan Carthers, and we're definitely happy and grateful for each and every one of you being here with us this morning as we take a look at the technicals and the fundamentals to see what we can take advantage of in this Forex market. So without further ado, let's make sure that we turn off any and all distractions, grab a pen and paper, take lots of notes. And as always, let's make sure that we can participate and engage on this Friday morning. So if everybody can hear me loud and clear, do me a huge favor, drop me a one in the chat. Let me know that you're here with me on this Friday. Kay, good morning. All right, everybody can hear me loud and clear. Now, the second thing is drop me a two in the chat if you can see my screen. We've got some I logged in this morning and we had a complete an update. I see with Zoom and some things kind of got it's a little bit different. So okay, all right. So everybody can see my screen. Good. All right, appreciate it. So let's make sure that we start each and every morning right with a strong foundation, as always in a Forex trade room, making sure that we are taking massive action, making sure that we're accepting all possible losses before entering a trade, preparing you for any outcome. Let's always make sure that we center ourselves in body, mind, and spirit, ensuring a balanced approach to trading, and that we trust in our education, strategy, trading skills, and intuition. Let's imagine our trade successfully materializing, and we want to make sure that we are obeying our trading strategy, avoiding decisions based on greed or fear. And we also want to make sure that we are never looking back or stopping once our trade has commenced, right? That is an important one, right? And it's hard to do, but it is so important that we do that, right? So, with that being said, I hope everybody has had an amazing week. My apologies for having to cancel the session yesterday. I had some issues here at my house with the furnace yesterday, right? So it's cold, so I had to get some things taken care of. So again, my apologies on that yesterday. But hey, we are here ready to rock and roll, right? Getting over to um, the fundamentals, taking a look at trading economics, and we want to go right over to today, right? Non-farm payroll, right? That first Friday of every month. We want to see what happens with the jobs numbers. Here, this is the forecast from trading economics. So the U.S. economy is expected to add 200,000 jobs in November, marking a strong recovery from the modest 12,000 gain in October, which was heavily influenced by Boeing strikes and the disruptions caused by hurricanes Helene and Milton. The unemployment rate is projected to inch up to 4.2% from 4.1%, which is still pretty good. At the same time, wages are forecast to increase by 0.3% month over month, slightly below October's 0.4% gain, bringing the annual wage growth down slightly to 3.9% from 4%, right? So we move over to trading economics on a Friday, and we can see at 8:30 is when all the fun begins, right? So as oftentimes happens, we have also Canadian employment data coming out today as well, right? So we should see some volatility. We also at 10 a.m. We have University of Michigan consumer sentiment, inflation expectations. That's always important. And then at 9:15, we also have FOMC member Bolton speaking as well. And we've got Goolsby and Hammock speaking today. It's a bunch of them speaking today. So busy Friday, right? And this is oftentimes you'll see the market start to pause, right? Day before a big fundamental occurrence like non-farm payroll, as the market is waiting to see what the numbers are. Okay, so yesterday though, unemployment claims ticked up a bit, right? So the forecast was 215,000, came through at 220K unemployment. Right? We see the natural gas stores. We'll take a look at that. Came through here, missed forecast, right? So expecting negative 38, came through a negative 30. So we will continue to watch and see what happens with natural gas as we well into now, at least here in Michigan, the winter season. So uh, let's continue to see what happens. But that's going to be it for the Friday. Fundamentals, India cuts the CRR and launches the SORR. I have to read more on this. I'm not too familiar, but the Reserve Bank of England maintained its key repo rate of 6.5%. Right. So again, moving into you know uh, central banks, whether or not they're going to cut rates or maintain rates. But you can see that they maintained it at 6.5%, aligning with expectations while continuing a neutral policy stance amid a recent slowdown in economic growth. Simultaneously, the central bank cut cash reserve ratio by 50 basis points to 4% to boost liquidity, while introducing a secure overnight rupee rate to further promote the interest rate derivatives. Okay, so I definitely need to get more in tune with what's going on with India, as they are becoming a or have become a major player, right? I'll say becoming. They have been, right? So some things to pay attention to and how it ties in to the currencies and things that we follow, right? And how it can we're all globally connected. We always say that, right? So it's important to follow them because population is huge, right? And they are on the rise, right? So need to pay attention to that. Okay, so we can see here U.S. rebound. World food prices rise for the fourth month. And European stocks extend a 7-day winning streak. We'll take a look at the stock market for sure. Industrial output, well, misses expectations. That's a shame, right? So that Germany's largest player in the Eurozone, so the industrial output, right, that missed. And then the UK housing prices rise the most in 2 years, right? So we get housing prices increasing. Moving over on the crude oil front, WTI crude oil futures extend its recent decline to around $68 per barrel on Friday as OPEC's decision to delay restoring halted production failed to lift the market sentiment amid expectations of oversupply next year. On Thursday, the producer group postponed the supply hike by another 3 months, right? We've been waiting on that. We remember that other meeting had been postponed to December 5th. So these are the results of that meeting. Opted to begin with a gradual increase in April and phase out production cuts over 18 months at a slower pace than originally planned. The decision aligns with the expectations as the group aims to balance declining global demand with rising output from non-OPEC plus countries. Meanwhile, the UAE also announced it would delay the planned 300,000 barrels per day increase in its crude production target from January to April. Over the week, oil is on track for modest gains following a sharp decline previous week. Right? So a little bit back and forth. Take a look at gold. Gold rose to around 26.40 on Friday, trimming losses from the previous session as markets awaited the fresh U.S. For insights into the Federal Reserve monetary policy. Data showed that the number of Americans filing new applications for unemployment rose last week, indicating a gradual cooling of the labor market. This comes ahead of the pivotal U.S. non-farm payrolls report. Right, so we know that the odds of a 25 basis point cut in December stands at 70%, which benefits gold by reducing the opportunity cost of holding non-interest bearing. Meanwhile, the World Gold Council reported that China, a top gold consumer, saw a drop in physical demand while investment maintained strong in 2024. It also forecasts that both sectors may stabilize, with gold jewelry demand possibly improving, while gold investment could slow in 2025. So we'll see about that. But in the short term, right, just as we've been expecting for a long time, right, 25 basis cut uh, coming from the Fed, right? It's at 70%. It's bouncing back and forth a little while ago, but it's looking like we're going to see another 25 basis points in December, again, which is what we expected. And that could be positive. So that's it on the fundamental front. Any questions, anybody? Uh-oh, hold on. Get everything updated here. All right, we're good. Nope. All right. So let's dive into the charts, right? Take a look at the DXY just ahead of the data, right? So you can see we came into a high and we curved off a bit. Now we're kind of just moving sideways, right? That's a sideways, right? A little bit of a some evening star type action there, but mainly just range, right? Mainly just range. So we'll see which way this is going to go and how we're going to close out the Friday. If we come down to the 4 hour on this DXY, you can see we definitely been trending to the upside. Let me rerun my fib off this low there. You can see how we've almost come back 100%. So we'll see, right? Again, like we saw on the higher time frame, price is just pushing sideways as we wait on the data. We'll see which way we're going to break out on this dollar, okay? On this dollar strip, okay? Any questions on the DXY? All right. So it is Friday. So right out the gate, like to ask you all, are there any pairs that you want to take a look at? No? Euro USD? Okay. D. Okay. Gold. GU. We'll take a look at that. All right. So right out the gate, we'll take a look at the Euro USD first. We'll have the gold and then GU. All right. So Euro USD, right? Let's take a look at it, right? Overall, right, we see the trend has been down. Okay. And we've got that parity level marked, right? Where 1 euro equals $1 right there. Okay. So we're ways away from that still. But right now we are climbing, we are retracing, and right, we are pretty much in at target one. Now, if you were playing this 80-20, okay, this is one of the few that we had found, right? If you're playing this 80-20, know that we are not too far away from a major fundamental report, right? With non-farm payrolls. So you have to make the decision, right? We're right here at this 105.99 level, which is a daily level. It struggled a bit. Not too far from TP1. So right now I would be managing this trade, knowing that I've got major data coming at 8:30. Oftentimes you never know where it's going to go. So if you've taken this out of the 80-20 zone and you're up right now, I would either adjust my stop into profit, right? Or look to close the trade at this point if you're up pretty good on the Euro USD, right? We're at daily resistance. We've seen reactions before, got non-farm payroll at 8:30. So just think about how you're gonna manage that trade. Maybe you leave it active, but you reduce it, right? So maybe you close out 50%, of the trade, or whatever percentage you think is sufficient. Uh, dollar Swiss yen. Okay. Swiss yen was one that we had marked up too for 80-20, I believe. Yeah. And that CAD. So Swiss. Okay. So we'll look at that as well. Right. So just think of how you're going to manage that. Right. That's why every morning we wake up, we want to look at our fundamental data, see it, check Forex Factory. That's the easiest thing to do. See if, right, or check the economic calendar inside the Forex trade room. Um, and see, what's out there that can have an impact on my trade, right? And we know this morning now, payroll is one of them. So we are in a down retracement zone, right? We are in an active 80-20 right now. Okay, so that's where we are there. This is the 1 hour, right? Smaller wave, smaller wave there. So we're pulling back. Here's that daily. Okay. So manage that accordingly. Any questions on that Euro USD? Yeah, good. All right. The next one was gold. So let's go into our commodities. Okay, we definitely can see this react today. And this is where we're sitting on the daily. Okay. So this could go either way. I'm not even gonna drop down to the lower time frames because we see it's clearly just moving sideways. So we need a breakout. Right? That's not doing much. That's telling us that the market is. So when you have a day like today, it's poised for a breakout, right? We have an event happening at 8:30, right? That can give us that can act as a catalyst to break us out of this range, right? So we're range bound, waiting on a breakout. That's all I've got on gold, right? We know that we have later in the month. I think that's midway through the month of December is that Fed rate cut, which could really 4 hour hit of 382. Okay, so we're paused. Okay, so let me I'll check.
My fib is running from the top, yeah.
Oh, from the top.
Hmm.
Okay, off this high.
Yeah, after that,
Okay, that's right. That's right. Okay, gotcha. So you
um, under the cloud, it's under the cloud. So
okay? So you think a possible bearish move?
hopefully.
I gotcha. Let's see. Oh yeah. So you thinking it may yeah, it's below the 52, 200, but they're both kind of flat. So right, so we'll see which way it breaks out for sure. All right, thanks for putting our eyes on that on these sub fibs. See what happens. All right, so let's see which direction
The
that
cloud is
breakout.
not, your
Hmm.
cloud doesn't go beyond where price is. How come that doesn't look like that? Is it because of
For the
the
cloud because of the way that fib is running, right? So let me think. There you go. See
okay.
it? Yeah, there we go. So we're just moving sideways. We're kind of flat with our clouds. It's been some back and forth, right? Bearish, to bullish, to bearish. So this just tells you, right? We're just consolidating and we're ranging, right? And we need price to break out. So we see which way we're trapped. So we're trapped right now. So see what happens, right? See what happens. But we should see something from that. Okay. We'll see if there's any surprises with the data from now forward. So that's gold. Um, let's see. I see that as well due to China stating there's been a decrease. Yep. So it's bouncing. It's about. You're welcome. You're welcome. So it's and it's definitely so you've got some mixed data, right? So we need an occurrence, like today where we got fundamentals coming up with our farm, right, to hopefully break us out of this range, right? But long term, you're still in a rate cutting environment, which typically bodes well for gold, right? So we know we now have a 70% chance uh, for a 25 basis point cut. So, you know, like I said, that won't come until midway through the month. So in the short term, focus on this. just non-farm payroll data. Yeah. So that's that. See what happens today. All right. What else do we want to take a look at? GU. So let's look at the pound dollar. Okay. And this has taken back off, right? So we identified our low, right? And we've been running long ever since, right? So we know we saw the DXY and the dollar has been correcting. This has led to an upward push, right? So we were waiting, right, to see, and this just broke, continued to move higher, right? So we continue to see a further dollar correction, and we just continue to move long, right? So we have now broken this trend line. So we didn't turn over in the zone, and this is a 4-hour chart. Okay, so it came and took out our A. We broke our downtrend line. So we have to. This fib's running a little funny there, but doesn't matter now. These fibs to the upside, so we'll move into our D extension here. Maybe depends on what that data comes out to today, right? So this short term, this bearish trend that we had because of dollar strength, this is now starting to move back to the upside there. So we have to flip, right? Right. So we already had our fib running long here, but what I was really looking at to see, you know, it push right to this trend line here, to this inner trend line or outer trend line. Yeah, inner one coming down to see if it would hold and then turn over. But the dollar continued to correct. So we just continue to ride it to the upside to figure out what's going on otherwise, right? Uh, and this move can actually, this move can actually, bounce around today. See, if you move here, hold on 1 second, right? All right, so if we move here, you can see that, right? The A taking out on the 1, 2, and this is moving to the upside. So it'll be interesting to see what this pound dollar does today, right? As we're moving, right? We're into overbought territory. But we may push. So this is kind of a wait and see. This is kind of a wait and see. I thought that dollar was going to correct and continue uh to to move long, but it hasn't, right? The dollar has continued to move to the downside, which we can see this moving up. Let's take a look at the pound. Uh Governor Bailey hinted at a possibility of right. We talked about this yesterday. About this four rate cuts. It was not yesterday, but the day before Ryan session. The possibility of 4 rate cuts coming in the coming years. Inflation continues to decline. During the interview, Bailey confirmed that the central bank will reduce rates by a total 1 percentage point, bringing it to 3.75. Bank of England will hold rate steady in December. Okay. So they're holding steady in December. We expect a rate cut from the US. Okay. Followed by gradual cuts next year. Inflation had anticipated. However, data showed inflation spiked 2.3% in October, up from 1.7. UK services said to continue to weaken. And employment, with employment in the sector declining for a second straight. So that's the next day. So we'll see. But right now, this tells me, right? So they're gonna probably hold in December, but a lot of this momentum to the upside on this pound dollar is due to dollar weakness, right? Not necessarily pound strength. But we'll see what happens. But we're running long. What do you all think? Somebody talk to me. What do we think will happen today with this setup?
I think he'll pull back for a little bit.
Think it'll pull back?
It's already at a D extension, right? So
Yeah,
once
yeah.
it will swing high form there. a pullback and then possibly continue, but
Mm-hmm. I'll be yeah. All right. I'll be interested to see what happens with which way this moves. Joy. Let's see. So let's put the cloud on it. Okay. Yeah, we're above the cloud, right? And above the 50, above the 200. We're taking out A's on two different time frames, right? So we're moving pretty bullish. We're moving pretty bullish right now. Like you said, maybe a correction, but then after that, what happens? So let's see what happens with this non-farm payroll data. It's a wait and see for me. You know, you know. See what happens on that. But right now, if you made the move on the daily, on the daily low and you took it long, that's a good setup. We shall see. But our eyes are telling us this is bullish. No doubt. No doubt right now. That's that. Uh, the fib on the daily, I can see price going to a 61.8. Long term, let's see. Yeah, yeah, yeah. Possibly. Possibly. We had talked about a while ago, right? On this one, your possibility of your crown type of scenario, with your tip here, right? With your left tip, right? Moving to your right tip. So we'll see what happens. But that's it is what it is right now. That's moving along. That is moving along. So okay. Hey, just ahead of the data, we'll see how that plays out. Taking a look at the Swiss yen, we had a request on that, and this again, right off the low, right? I love these daily swing highs, swing low plays, right? It kind of leads you to some good setups on a lower time frame, right? If you're using this as your basis, right, to look for setups on your lower time frames, right? So we had that's a beautiful morning star setup. Decision, indecision, decision. And we've been pushing higher. Stochastics in the buy zone. We know this one was lining up pretty nice for us here, and we're getting it. So look at that, right? Pushed a little bit lower in that 80-20 zone, but we didn't take out that extension. And now we're moving to the upside. So right now we're still on track for that target. Okay. Daily is your best friend. I like it too. I like it too. Right? I like it too. So this has us moving in the right direction, barring any type of crazy surprise from non-farm payroll. Because we know sometimes, right, you'll get a shocker with non-farm payroll, like that 12,000 jobs that they posted last month, and sometimes that can create a risk-off situation in the market. And a lot of times when you get a risk-off situation, you'll see that yen strengthen, right? But you can also see the Swiss strength because it's a safe haven. So I'm saying that to tell you that just because this is not a U.S. dollar-based pair doesn't mean that it won't be impacted by today's data for non-farm payroll. Okay, so that this type of report typically has a broad impact, right, across the markets and all asset classes. So just something to think about today. And this is a switch in, right? So we know that's a big mover. So off of that 80-20 zone, right? That's already up 200 pips. Okay, that's a good move, right? So you had to draw down off this level, depending on how you took it, right? If you took it off that 80-20 zone, you had some drawdown. If you took it off the daily support, then you pretty much nailed that trade. But up 200 pips or so, depending on where you took it from. So yeah, we'll see. We'll see what happens with that. That's moving pretty good. That's moving pretty good to the upside. All right. We'll run the fib to the upside off the one. And you can see we're about to, and that's a beautiful ABCD pair. right? Right at the edge of that buy zone. Bang, right? About to hit the D extension almost right in line with that daily level. So we'll continue to watch how that plays out. Any questions on that switch in? No? All right, all right, all right. Uh, and oh, and are you still in that are you still trading the that PLTR setup that you told us about? We talk about that all the time. That you put us on to that setup. Yep. You still holding that in your portfolio? I hope so. No, what? No. All right. You still watch? Yeah, that was moving up, right? That was moving up. Yeah. So we appreciate you for putting us on with that setup. That's been big. Oh, you never traded. Oh, okay. You just traded in your demo. Yeah. Well, I took you up on that one for sure. All right. The other one I want to take a look at. I know we want to take a look at this dollar Swiss too, but since we're here in these yens, we'll take a look at this CAD yen, right? This is one that we were playing too. So you can see here where it's look at this, right? I love these when they come into support. Right? You see how we got that swing low? And you see how we've got this alignment, right? Right in our buy zone here with our stochastic has a good chance, right, to continue to higher. And we had already identified this, right, as trend line break and to move down. But then we said, hey, overall, we see what's going on long term. Got an 80-20 play. So we got a nice reversal going on, right? A little bit choppy. And we're still progressing towards this target. Now, keep in mind today, there's just not non-farm. We got Canadian employment data coming out. So this will be impacted. So hopefully everything's all good with this the CAD data, and we moved to this TP1. All right, so that's where we are on the CAD. Yeah, any questions on that? No? All right, all right. Moving down, and we wanted to take a look at this dollar Swiss that was requested. So let's see, right? We put in some highs, right? We put in a high here. Yeah, I'll be honest with you guys. I didn't think I was gonna see as big the way the dollar had been moving. I didn't think we were gonna see as big a correction as we're seeing. That's throwing me off on a few setups that I was looking to possibly take and get involved in. Right. So you got a high here. You've also got here. So we'll see today. That's clearly moving bearish from a daily perspective. Right? And so we've got okay, 87.30 is a possibility of a level we come into. Yes, link this down because this is right past resistance, possibly becoming future support. This whole area. Um, stochastic is back in the bison here, right? We move long and then we push lower, right? So that's an adjustment on this trend, right? Again, the dollar continues to correct, right? So let's see if we get a U-turn with the non-farm payroll today. So we push lower, right? Thought it might hold here, but from a 4-hour standpoint, right? With this move to the downside, we're just not really moving into your buy zone deep 61.8 level. So let's monitor it today. Let's look for evidence, right? We've got a 4-hour stochastic in the buy zone. Maybe, right? We start to see it correct. We'll wait on some evidence, right? So Move it to the downside. We're in the buy zone. Here's that level at 87.30. That's at an 86 retracement level. So it's all going to hinge on this data today. Right? So I'll take that out now because we didn't get that bounce. So let's see if it comes in above forecast, if it misses forecast, if it misses forecast by how much. Sometimes it could come in right on forecast, and it might be a certain area, right, where certain areas where jobs declined or jobs increased in certain areas that could be positive for the overall outlook and how the market, interprets the report. So that's why I never try to, unless I'm already in the trade that I'm managing, that's why we try not to time payroll. So with something like this, we've got time, right? If the report is bad, we can see it push down, right, to retest this level, which means, hey, it's moving down further into our buy zone. But as long as we, you know, don't get any sort of a trend line break or a cloud break, if you're using the cloud back to the upside, then we'll just continue to let it play. Right. So right, it's obvious it's been long, right? So we're in an up retracement zone. It's just where does price settle down if it settles down at all? And that report's going to tell us a lot about that. So just continue to be patient. We put the cloud on it. Let's see. You see that we're below the cloud, right on the 200, just ahead of the data. Like I said, you got some things shaping up where it could go either way. Okay, in our buy zone, it's up against the 200, 4 hour. Stochastic is in the buy zone. Let's see what happens. Right, that's one to watch. I did. Uh, you said it was rallied. It rallied off the.
Benny, ever since I watched that movie, I hate to say it, I go look at the ticker now.
Yeah, well, I do it. I've always done enjoy any time that there's layoffs. Like we hear like United Airlines laid off, or one of the car companies laid off, and it's sad. But
Okay,
I
thank
go look at the chart, and oftentimes it, the market's putting in a rally.
you. I'm not laughing. I'm laughing at me, not at the situation. But I'm like, I don't know what made me. And then I went to go look at XLV. What was it? It's XLV, right? I looked on my what's the name to see what the
Yeah,
ticker was and went, and I'm like, they wild for that.
yeah,
Um,
it's unbelievable. Yeah, there you go. It's unbelievable. Like it's just the way the world works. It's just weird and strange, but it just tells you what the world revolves in.
yeah.
You know, it's like how do you have an assassination of a CEO and the stock up? It's crazy. It's crazy. But it is what it is, I guess. But yeah, you know, who knows how that's gonna play out. But yeah, there were a lot of investigations going on. Um, yeah, the way of the world, or the way of the fire. Yeah, that's true.
And
And
I
go
should have
ahead.
known it. I should have known it because we end up getting an email warning us about insider trading. And I say, who doing inside trading? I didn't know about it until, you know, the incident the other day. And I was like, oh, okay, that's why. So yeah.
Yeah, they do it. They it happens a lot, right? It happens a lot. Like I know when Obama was in office, he actually put in a policy, right, for elected officials, congressmen, and stuff like that, so that they're not supposed to do it, and they still do it anyway, and that's crazy because now you're bought and sold at that point, oftentimes, right? That's why they go in broke and come out rich. which is insane. So, but when you think about it, but and to go back on your point, yes, Darwin doesn't offer PLTR, but you when you put us on to it, I was thinking for the, talking more on in regards to your long-term portfolio, like to buy and hold because it's such a good company. And I do see their stock continuing to rise, especially in that sector. Yeah, definitely these days. So, but yeah, everybody, that PLTR is right. It's not on Darwin or anything like that. But for your long term, if you got a Charles Schwab account, long term investment portfolio, that is a really good company. That is a really good company. So, yep. So that's where we are on that dollar Swiss. I'm glad you requested this one. Because that's gonna be a good one to watch this morning once the data comes out to see what happens. So we'll see. We'll see what happens. Yeah, yeah. But appreciate it. This is gonna be uh this is gonna be a good one to watch. Yep. 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 So that's that. Moving on, let's take a look at, did we have any more requests outside of that this morning?
I was just gonna say GA has 80-20 on the 4 hour and a sub fib.
Okay. Oh yeah. Look at this, man. Right? Jeez, so Australia, right? China, China struggling, that impacts Australia. Then, right? Right. So if we go back to our training, one of our key fundamentals, if there's one that you pay attention to, right, that can really have a major impact on your currency is GDP data, right?
I have a 786 on retracement, so that's good confluence.
Gotcha. Take a look at it. Take a look at it. So that GDP data, right? So you see revealed that Australia's economy grew by just 0.3% quarter on quarter in 3 months to September, falling short of market expectations of 0.4%. On an annual basis, the economy expanded by 0.8%, well below the anticipated 1.1% growth rate typically associated with recessions, right? While the RBA is widely expected to keep rates unchanged in the December meeting, right? We've known that for a while. The likelihood of a rate cut in February has increased, though a cut is not fully priced in until May. Additionally, concerns over China's economic struggles and U.S. President-elect Donald Trump's tariff threats have weighed on the Aussie dollar, which is often seen as a liquid policy, right? So down with that Aussie for right now, right? And so moving up to the upside, okay? So let me try to see what's going on. This is moving sideways. There we go. I thought I had a bigger fit. Okay. So let me pull these back out. Oops. There. All right. So we're running long, right? Came to the edge of our buy zone. So based on this 4 hour, right, this current fib, right? This is where we're headed, right? To that 203 level. So we look for pullbacks and continuations. We said we had, all right. So Donette, talk to me again. What do you say?
Yeah, that's what I look at, the sub fib, but I think my fib, um, I don't know. The capital fib is to the downside.
Oh, you're running to the downside?
Mhm.
Yeah, I've got it running long. Which level do you have it running? You got it running here off this high or further back?
Further back.
To further back.
Mm.
I've got mine running long because of the daily, the way it was looking off the daily. Here. So you're here you are right here.
Yeah. Mhm.
Okay. This A6. Fundamentally, because of what's going on with the Aussie, I lean more towards that A being taken out eventually because
Okay.
of everything's now that is because you can see how it's been a lot of back, right? A lot of back and forth. But I say that just because of what happened with that GDP data, right? So sometimes we'll have an initial idea, and then when you is fundamentals are so important, especially those key, that key data, right? Like GDP, that could that could totally cause you to just shift your narrative, right? Or if you were indecisive, right, in regards to which way the market would go, a report like that just came out for Australia, I kind of, for example, so if mentally I'm consolidating, right? So inside my mind, right, and I'm range bound inside my mind, a GDP a GDP report like that just caused a break, right? To the upside. So that's why I'm more so leaning towards this continuing to climb, right? Eventually to that de-extension because of uh, the GDP data that just came out. Because the market tends to ride for some time off that type, right? So that's what I'm looking for, pullbacks and continuations. So we'll see, right, what happens there. I'm gonna leave that like that. And here we are, right? So you can see how the market is just accelerating. So this was our original 80-20 play, right? So anybody that took that, right? Congratulations, right? And you can see how things change, right, Donette? Because I actually had, hey, this is gonna potentially hit these TP levels and then short. See that? How I had that marked up on the one and I had a trend line break,
Yeah, that's good.
you know, because I was thinking that originally also. When that GDP data came out, I'm like, man, this is keep moving, keep moving long. So it caused our 80-20 play to play out. But what I was thinking over the long term with that turning over, because the Aussie had been showing strength for quite some time, right? So, but now that GDP data kind of changes the tide on the Australian dollar for now, for now. So we'll see, right? This is moving along. Most likely we'll hit that extension. Again, we got non-farm payroll data coming out. We know that the Aussie is a risk on, you know, if it's risk on, it typically tends to do well, and strengthen. But it's hard oftentimes to override when you have, you know, economic data attached to a currency that misses forecasts like that GDP economy impacts it. So we'll see what happens once it hits this extension. Can we get it pushed to that day to that monthly level? Right. So we'll look for pullbacks and continuations. Pullbacks and continuations. We just took out a major high there, right? So at some point we're gonna see it. See it. So is China holding the Aussie back? Yeah, part of it. Part of it, right? Because I ain't gonna say just part of it. It's a large part of it too. Because thing about it, right? What GDP is, right? Your growth, right? That's tracking your nation's growth. And China's the number one partner, right? So Australia depends on exports, right? Going to China. So if China's struggling, that could cause them to struggle, right? And you can see it's kind of playing into that. It's playing into their GDP data, right? It's slowing their growth. So pullbacks and continuations possibly on this pound. Okay. Okay. And it's been this year, everybody, like while the stock market has run in a pretty good direction for most of the year. Gold, we came in 2024 saying that was going to be the play to the upside right there. Why? Because we were in an interest rate cutting environment. Gold does well, right? So that was an easy play. But currencies, there's been a lot of back and forth with currencies this year, right? Some of them, it's been some pretty tough setups. So while like stocks and indices, ETFs and things like that have been really good plays in regards to, hey, this is the direction that price is moving. You know, some good trends. Currencies have been a lot of it's been a lot of back and forth with them this year, right? So you can see here, right, how does when you look at it from a higher time frame, right, that's a range, right? And so while we look on the lower time frames, and like, man, that's running long, big time. Like, man, but it's been here before though. It's been to this 199, $2 level before, right? So it's not like it's unprecedented. We've been here, right? In the not so distant past. So a lot of back and forth on currencies this year. Some of them been tough to trade, right? So that's the pound Aussie. Um, I want to take a look at indices. So we'll come in and take a look at this S&P because this is important, right? Just ahead of the data coming out and where we sit. Okay. Where we sit, right? So nice bounce to the upside. Daily though, we're overbought. Okay. So we're getting near that momentum peak like we had last time that led to a bit of a correction. So nice run. And we go down to the 1 just to see where we are. Okay. So we got this break and this retest, which is beautiful. Look at that. My goodness. I wanted to see where that came in. Right? It's fib. So look at that ABCD wave that played out here on the 1. My goodness. Right? So new AB boundary. So naturally what we look for, right, the framework makes it really, really easy. Is we eventually we would love to see it correct. Don't know if it'll do that today. The data, if it does, that would be awesome. But this data could also push, right, price up into our zone. Okay, so we'll wait to see what happens with that non-farm. But that's the S&P on the 1 hour right now. And so we'll see how that plays out. Any questions on the S&P? We got a nice bounce recently. Right? So, you know, this is really cool because this is the S&P, but a lot of those ETFs and things that we track that follow the S&P closely, right? They've continued to run to the upside for the most part. So that's good. US 30, right? So we got that same bounce. And we had this one marked up. And that one played out. So I'm imagining, right, on our 1 hour chart, right, that we've got something similar to the S&P, right? So bullish moving sideways makes sense, right? Just ahead of a major report. So let's see what happens there. Let's see if the report forces some sort of a correction. and then maybe a continuation. We'll see. Today, taking a look at the NASDAQ. We're still trying to get to that 21,600 level. That's a higher time frame level. We've been tracking this on the 1. Look at that ABCD wave, everybody. Beautiful, right? So we're almost to that 26, that 21.6 target. Look at that. Nice. So we've been right on the money. See what happens come down from payroll. The Nikkei, right, starting to pick up again. But man, has it been a choppy. Okay, so we're still within our Fibonacci framework, right? Our ABCD wave, but we're ranging for the most part. See if we can get that to continue. This is a 4-hour stochastic in the buy zone. We've got a higher time frame target that we're trying to get to eventually. 43,589. It's gonna take a while. Short-term target on the 4, 41,398. Let's see if we'll get there. UK 100. Still kind of just moving sideways. Okay. The volume there, right? We're just ranging. Look at that. Our momentum is moving to the upside, but we're just stuck ranging. So we need that to break out. Eventually it will. The Russell. Let's watch this one today. We've been on point with the Russell, especially from the higher time frame. Right? So let's see what happens. Non-farm payroll at 8:30, then the markets are open. See what the reaction is going to be. This is back in the sweet spot again. Right? That's a 1 hour. That's a 1 hour play. If we move back up, let's go 4 hour. Right? See what happens. Right? There we go. 4, still tracking. Right? To move to the upside. Let's see if that holds and we move up. So that's where we are on the Russell. Hey everybody. Did we do it or did we do it? On that GR30. ABCD wave complete. 19,966. We got that and then some. So I'm gonna drop some sevens in the chat for the group on this one. Right? Patience pays. Patience pays. All right. What we're gonna do, we're gonna trade in and out of this. Why not just sit? Why not just sit and just let it run? Did it take out our A? No. So if it doesn't take out my A, it has no choice but to go my way. Right? Nailed it. Boom, right off that 61A. Right? So even think about it. If you work your risk management out right, okay? He said, oh, Benny, I took it off to 50%, and then I got caught in drawdown. So what? Did it take out your A? No, then it has no choice but to go. That's why risk management is important, right? Now, if I'm over leveraged on the play and I'm risking it all on the play, then yeah, I'm gonna have a headache, right? Getting caught in drawdown. But if I'm cool with my risk, okay, then I can let that float, do its thing. And while that floats and figures itself out, because my risk management is so good, right? Right? Just talking overall, right? Not talking about myself. Just going through the thought process. Like, man, my risk management is good. I'm only in it 0.5%, 1%, right? Even 2%. While this trade is in drawdown, it doesn't tie me up getting involved in other trades. See? So I can let this work itself out. Okay? Hope that makes sense. So the extension hit on that GR30. Yeah, you learn not to sweat the small stuff on a lower time frame. Yeah. Yeah. And you evolve and you get to that. right? And so look at that running. Okay, nice. So that's a daily D extension hit on that one. Where we at? This is the semiconductor ETF. Never moved it out of this workspace. So that was still doing the dance, right? But I just look for that semiconductor sector. I just look for positive future. So that one's kind of just ranging right now, kind of just doing this thing. So that's it. And brought up the I think I've got XRP must be Ethereum. So XRP is correcting right now. I swear I had a fib on this. Yeah, right. That's corrected to the downside. But that's on a chart though. That's on a 1 hour chart. Definitely uptrending on that. Let me highlight this area. It's amazing, right? All the crypto gurus all of a sudden showed up on Facebook again.
Let me tell you about the first thing I seen on somebody that was asking me about it. So I guess they're an expert.
Yeah, there's a lot of marketing joy, a lot of training courses just popping up, a lot of I told you so's from people on the Facebook page that I haven't seen in a year at least, right? That's how it goes. So gotta gotta have your eyes on the market all the time, right? If you're gonna be good at this thing. All right, so let's see where that next rebound happens. Right, we're getting a correction now. I like that better for my hard time. So we're kind of just moving sideways, which is oftentimes what happens, right? When you come around your buy zone, your key levels for your fib, you get that sideways push. Everybody an expert, including me. Yeah, yeah. The hype train for crypto is running, but whatever it takes, right, to get people focused and hopefully to invest in the future, right? To think about investing. So whatever brings people to the marketplace. Uh, it, it's uh, it's I joke about it, but that's what's most important, right? Because people need to know,
Right.
about the markets, right? So whatever it takes, and policy wise, right? He has a pro crypto cabinet, right? So once you get beyond like, okay, I can't believe this guy's back in office. You then have to ship your narrative like, all right, how am I going to take advantage of this stuff and make money, right? So when you look at his cabinet picks, they and a lot of it's for their own personal gain, right? But because a lot of them are involved in crypto, they're pro crypto. So you're going to see some pro crypto policies, right? So I think it's is it Treasury Secretary? Somebody he just picked that's what pushed Bitcoin to 100,000. So again, is always what's behind the move, right? What are the fundamentals that's driving the market? It's not just happenstance, right? And so moving forward, if a million people start posting about crypto, fine, that's cool. Just get everybody in these markets because I know one way that you can beat inflation is by investing, right? And inflation is starting to go back down, but in the past that was a major concern, and a lot of people could have offset the pain of inflation by investing, right? If they had the means and the way to do it. So being that these things happen in cycles, this is not going to be the last time in history that we see high inflation, right? So if people can learn that and get involved and take advantage of these moves in the market, I think the better off everybody's going, So again, whatever it takes. So there we are with XRP, Ripple. And so we'll see, we're at a pause. Can we break out beyond that trend line? Right. So that's when you want to pay attention to. Here's Ethereum on the 4-hour chart. No matter the asset class, right? We're running the ABCD waves, right? We got a 382 correction now on this. Do we turn over? Do we make another run to retest the lows? I would love to see that. Right? Do we get price to pull back? Do we get price to pull back? That would be beautiful. That would be ideal. Stay patient, right? On Ethereum. Okay. So we should in the future, right? Bring up more charts. I don't have a lot of time today to bring up the new ones. I think, and you posted something else too, right? ADA, right? So we'll bring up more charts, knowing that hey, crypto could be on the rise with the policies that are going to be put in place. It is what it is, right? It is what it is. So we will see. That is all I have today. I appreciate you. We just went over about 10 minutes, but I appreciate you all hanging in there with me. And so we will be here tomorrow, 7 a.m. Eastern Standard Time, for the weekly ritual. So we'll move more into we didn't get to go over, a lot of stocks, things like that, like in portfolio, like the Qs, right? Running. We'll take a look at some of that stuff tomorrow. And it'll be good to take a look at that stuff tomorrow, especially after this EEM, especially after the non-farm payroll, to see how the market reacts. That's a good detail. I'm kind of liking that. But we'll go in more detail on that tomorrow. We'll spend some time on some stocks and things like that. Hey, everybody, enjoy the rest of your day. Remember, 8:30, we got non-farm payroll and employment data coming out of Canada. We should see the market react. Make sure we'll get something posted in the community once that data comes out. Everybody, don't just count your pips, but indeed count your blessings. Enjoy the rest of your day. Bye for now.
Thanks, Benny.
You're welcome.